Hello everyone. This video was uploaded by Will Duckworth, lead strategist at Narrowgate Trading. It's March 14th, 2025, and the purpose of my recording the following is to inform those of you who join me during live trading as to what my game plan will be as I head into next week. If you were with me during Thursday and Friday's New York sessions, you're aware that I'm now 100% satisfied with my day trading protocol for accurately interpreting what's going on with price action at the intraday level. Nonetheless, this morning's activity made evident that even with the clarity provided by such precise measures, they are insufficient to adeptly navigate the markets on days when the Forex pairs evidence a significant lack of follow-through and are in constant flux. Accordingly, feeling no more need to analyze price action at the most granular level, I returned to a task I began last Saturday, which was to turn my attention to more of a global perspective on the Forex market. Initially, that involved concentrating on 2-day and 8-hour measures. However, subsequent analysis has led me to transition my focus to daily, 12-hour, and 2-hour price action. With this in mind, the parameters I've chosen for my 1-hour charts include settings I selected based on the belief that optimal trade conditions exist when the slope of the daily, or more precisely the 20 and 1/2 hour, price flow is at least 0.6875 or negative 0.6875, or better yet, 0.0, or negative 1.0. The slope of 12-hour price action is at least 0.1749 or negative 0.1749. And the slope of the 2-hour baseline is at least 0.2379 or negative 0.2379. With all these measures coming from lower panel readings appearing on histograms plotted within what I call price anomaly channels, I've concluded that perhaps the best longer-term or pseudo-swing trading strategy is to enter positions when 2-hour price flow reverses direction above or below the daily price range envelope at 0.70% to 1.35% deviation. A second potential scenario for entering short positions is when the intraday trend turns south after having climbed above the upper band of both the 2-hour price flow channel at 0.18% deviation and the 12-hour price flow channel at 0.20% deviation, or to enter long positions when the intraday trend turns north after having crawled below the lower band of both the 2-hour price flow channel at 0.18% deviation and the 12-hour price flow channel by 0.20% deviation. On the other hand, when drilling down to operate at a more granular level, the daily measures are rendered almost totally, or perhaps even totally insignificant. In such an environment, optimal trade conditions are deemed to exist when the slope of the 12-hour price flow is greater than 0.074 or less than negative 0.0744. The 1 2/3 hour trend is greater than 0.3092 or less than negative 0.3092, or better yet, greater than 0.4487 or less than negative 0.4487, and the slope of the 40-minute baseline is greater than 0.973 or less than negative 0.973. If the 12-hour price flow is negative, it makes sense to enter short positions when price is located at the upper bands of both the 40-minute price range envelope at 0.20% deviation and the 1 2/3 hour price range envelope at 0.20% deviation. Conversely, if the 12-hour price flow is positive, it makes sense to enter long positions when price is positioned at the lower bands of both the 40-minute price range envelope at 0.20% deviation and the 1 2/3 hour price range envelope at 0.20% deviation. However, exits from these locations need to be confirmed by a reversal in the direction of the 40-minute baseline. And, speaking of the 40-minute measure, if the gist of the general overall directional flow of the intraday trend is bullish, another potential scenario for entering positions is when candlesticks find themselves below the contrarian band of the 40-minute price flow channel at 0.03% deviation. Conversely, if the gist of the general overall directional flow of the intraday trend is bearish, a potential scenario for entering short positions exists when candlesticks find themselves above the contrarian band of the 40-minute price flow channel as 0.03% deviation. These 4 scenarios constitute the setups I will be recognizing as justification for thinking about entering whatever positions are judged to evidence a much better than average statistical probability of leading to profitable outcomes if and when the criteria I described above are met. And again, they are designed to mitigate the possibility of getting caught on the wrong side of price flow when currency pairs are evidencing a significant lack of follow-through and are in constant flux at the lower time frames. Until then, I hope everyone has a wonderful weekend. In the meantime, stay awesome, but bye for now.